All right, very warm welcome for everyone in the Nordics, and I know today is a should be a quite cold day in Sweden because it's February, and a lot of people are also going skiing this week. So very grateful for the time today to participate in our presentation of Asia Nordic's UCITS Fund, and together today here we have our guest Nina Zhang, who will be presenting a deep dive into 361 Degrees International and talk much more about the company strategy and how they aim to expand their market share in the Chinese sportswear market going forward. We will start off here with a short introduction, but before we go into all the agenda points, it is extremely important that we go through a short disclaimer text. So, Albert, could you just briefly take us through this disclaimer, and then we will go into the agenda and the main presentation.
Absolutely. Thank you. Good morning, everyone. So before we dive into the presentation, I want to highlight this important disclaimer. This presentation contains information compiled from public sources that Nordic Asia and Asia Nordic AB believe to be reliable, but we don't guarantee its accuracy. The content represents analyst opinions and publication time and includes forward-looking statements that involve risk and uncertainties. This is not personalized investment advice or an offer to buy or sell securities. Investment values fluctuate and losses can occur. You should consult professional advisors about your specific financial situation. Nordic Asia and Asia Nordic AB and its affiliates accept no liability for damage related to this report. Our company maintains a restrictive policy on personal dealing and conflicts of interest, with full disclosures available upon request. All company security holdings mentioned are disclosed in our quarterly and annual reports.
And just to make sure, so it's very clear that we are current owners of 361 Degrees. So that's it is actually part of our investment holding. So that is very clear that this is a security and a portfolio company that we already have our current investment position within. All right. Okay, so that's a short summary of the disclaimer text here. And of course, also for 361 and all the contents here also include opinions that could deviate from actual. So therefore, please consult your investment advisors for the accuracy of contents. And none of this is personalized advice. All right, just to reiterate that a little bit. Okay, very good. Thanks for this. And then let's move into today's presentation. So I'm really happy here to have Nina Zhang, who is the VP and also Chief of IR at 361 International Degrees, to join us here for a deep dive of the company. Right. So for us here from the Asia Nordic UCITS Fund, which is part of the Asia Nordic Asia Group, we will do a short introduction, both a little bit about us. I think most of the people here know us quite well, but we'll do a short introduction and also describe a little bit where we are in the cycle and why China is really relevant now and why we start to see some of the fund flows and the valuations gap starting to converge, so that we do a quick introduction of where we are in the market, and then thereafter we will deep dive into the 361 presentation and leave it to Nina for the company presentation. And Nina will of course follow some of the key points here. We'll go through a little bit about the company positioning, and then along with quite a lot of details when it comes to the business strategy, financial performance, etc. At the end of the presentation, we will have a time for some Q&As. So please, if there's any notes that you have toward Nina and about the 361 company, please make sure that you make some notes along the line of the presentation. And then towards the end, we will open up for some Q&As. All right, so that is our agenda, and we hope to have a very fruitful discussion today, and very happy again to welcome Nina Zhang to join us for this unique presentation. To start off here, very shortly about Asia Nordic Group. We are a Swedish, quite specialized, unique investment group. And today we are presenting via our subsidiary, Asia Nordic, that is running the UCITS Fund, Asia Nordic China Focus. Our uniqueness is really to be the bridge between Stockholm and Hong Kong, and we built a strong local presence. My own name is Yin Wang, and I used to be the management trainee of Melker Schörling AB, and I've been here in Hong Kong since 2014. With us, within the group, we built a very strong local presence with our analysts in place, and also be able to decode what's going on in the Chinese market through our regular company visits and the localized value chain of the analyst network that we work with here. And our goal is to really decode, and help Nordic investors to penetrate this particular market, both in terms of the macro and the portfolio holdings. Our fund and all the details around fund is available at asianordic.sc, and we will also go through a little bit more about that towards the end for those who are interested. All right. If we move on a little bit and just have a little bit background before we give it over to Nina, is that we've mentioned this to many investors that we have met during the autumn period, and we've seen that the Chinese nominal growth has been slightly below its historical trend during the COVID years, and that is mainly due to the quite long restrictions that we had for COVID from 2020 to 2023, to end of 22. After the reopening of China that happened in the beginning of 23, we have actually not seen a strong economic stimulus package to really boost the economy until the policy turning point last September. What this has implied is that the nominal GDP growth has actually been in some times below that of the real GDP growth. As you can see, that the inflation that used to be around 2 to 3% per annum has gone down to 0 or to negative in certain periods of time. And that is quite interesting if you compare to the high inflation cycle that we have in the West. And the main reason for that is that the Chinese government and also the Chinese PBOC has been very restrictive and very conservative when it comes to monetary policy and also the fiscal policy to stimulate the economy. So as comparison, you all remember in US, after reopening of the American economy, President Biden injected $1 trillion consumer check package to revive its economy. And the Federal Reserve balance sheet went from around $4 trillion to $8 trillion over a period of 1.5 years. That has not happened in China. But since late September, we saw a very significant change in the policy, right? And in the end of September, we already at that time got a combined measures both on the property sector and also on the monetary policy side that aims to moving into 2025 to reflate the economy, right? So that was part of the stimulus package, was a main highlights of the stimulus package that was announced late in September, with the goal into 25 to lift the nominal GDP, because inflation level right now is very low, and the inflation level needs to come back up for China to get up and recover to a higher nominal growth rate. So right now we're actually in a very exciting times, because last year we got the policy change and we got also parts of the monetary policy, but moving into this year, especially next week, we will have the 2 sessions in China, and during the 2 sessions in China next week, we also expect the fiscal stimulus packages will be announced. Because if you want to reflate the economy, what China needs right now, then you need a combination of both more loose monetary policy combined with fiscal policy. So the monetary side, an indication we got to a certain extent last year, but right now actually we're waiting for the fiscal stimulus package that will be announced next week. Right. So that is where we are in the cycle currently when it comes to the Chinese policy making and also the Chinese business cycle. If we move in a little bit into the market though, so what we have seen over a long period of time is that the Hong Kong market has been trading at a quite significant discount. So this particular chart above is actually a measure that we call earnings risk premium, right? And earnings risk premium is 1 divided by PE minus the long-term bond yields. So quite astonishing, quite interesting to look at is that, due to the very strong fund flows and valuations that we had in the American market, the inverted PE for the S&P 500 is actually below 5%. And now, because of the bond yields that has been quite elevated during a period of time due to high core inflation, so the bond yields has been hovering around 4.5. So in certain periods of time, we are actually seeing in the market that the risk premium, earnings risk premium in the American market for equities versus that of bond has been negative, right? And that is very seldom you see that because of the high PE ratio and also the high bond prices. Therefore, you have actually inverted or negative earnings risk premium, which doesn't make sense because, as everybody know, equity has a much higher risk. So therefore, the expected return on equity should be higher than the expected return on bonds. Well, if you look into the Hong Kong Stock Exchange and also to certain to much also in the Chinese mainland market, we can actually see that the Hang Seng Stock Index as of last year has been trading around a PE 9, which is a very low historical valuation level. At the same time, as the 10-year bond yields in the Chinese market has come down to around 1.7, which actually means the earnings risk premium in the Hong Kong stock exchange has actually increased due to the suppressed valuation and lower bond prices. So it's quite interesting to see the paradigms between China and also US, in which the US now pays around 4.5% bond yields, while the China pays around 1.7 on a 10-year bond yields. And that has created a quite strong disparity when it comes to the relative return expectations between the Hong Kong stock market and that of the US stock market. And we're starting to see now, starting in this year and also with the catalyst of DeepSeek, etc., that the price discovery for this particular sector has started to kick in. So with announcement of the DeepSeek large language model and also the recent uptick in Alibaba that has gone over 50% in the past 1.5 months, we're starting to see a certain price discovery into the market that sees that, the price disparity here is a little bit too high, and there's a lot of value to be discovered in the Hong Kong Stock Exchange moving ahead. So that is a little bit very brief background on both the policy. You can say that summarize really quick. Nominal GDP has been below trend, and end of this September, the goal is to stimulate and reflate the Chinese economy and to lift inflation up in 2025. And then here we have seen a historical high disparity when it comes to risk premium between the Hong Kong and the US stock exchange that is now starting to converge. All right, so that's some key background here. For us in the Asia Nordic Fund, we are very strong focus on a couple of key areas. We leverage our local market presence with the analysis and the macro and also market side. And most of investors know and seen our presentation before. We do all our analysis ourselves in-house. So we cover the market very in depth through the analysis that we do. And then our key focus is to focus on Chinese consumption market, because we know if China is gonna grow towards its long-term targets of 2035 to become a mid-income country per capita and 2049 to become a high-income country per capita, it needs to expand its Chinese domestic market. So if you look into the consumption as a percent of GDP right now in China is only 40% of total GDP, whilst you compare to that of US, the US GDP as of total consumption as total GDP is over 70%. So there's a great disparity. And the focus right now is to really stimulate the domestic market, right? And that was further highlighted during this policy speech last year. So our focus is China consumption. Within comes China consumption, where further deep dive into 3 sub-segments. We own a very concentrated portfolio, around 20 holdings within the key theme China consumption. And within China consumption, we focus on service consumption, domestic retail brands, and also real estate aftermarket. So our portfolio looks quite a lot like this. and more about our portfolio and our fund and analysis, I think we can definitely share much more to you going forward. But what we will do more today is to highlight one of the companies that we definitely feel is a challenger in the market, which have had a very strong and steady development and taking market share during these years, and is, you can say, 361. And to make it simple for our Nordic investors to understand, 361 is like an Under Armour of China, right? A challenger to the main existing brands such as Anta, Li-Ning, and even to the Western brands such as Nike and Adidas. And since we covered this sector within the domestic brands, we followed this company over a period of time, and we've seen a very consistent development of 361. Right, and 361 has a couple of key areas with which Nina will go through much more in detail. A offline presence that stands for around 70% of its all total sales outlets. Online penetration has definitely picked up. Right now is almost around 25% out of total sales. And then also the kids segment that has been a very strong contributor and a growth segment for 361. Along these lines, 361 has continued to invest in both brand building and technology, so that not only addressing the mass market as a very price competitive product, but now to further lift its core competence and become a product and a brand name that is even more known, and to be able to compete with larger names such as Anta, Li-Ning, etc. 361 have also recent years signed a very important basketball store that's called Nikola Jokic, which I think some of you know from before. He's an MVP of NBA for the past couple of years, right? So he actually, when he goes and plays in NBA and also in Olympic Games, he's wearing 361 shoes, and that is part of the company's brand strategy, which Nina will go through much more in detail. On a little bit high level, you see some of the financials here. So very steady growth and also improvement on the profitability level. But right now, as we speak today, we think that 361's valuation is very conservative. And given its current trading price and also the shareholder policy, you have also a direct yield of over 6%, given these particular multiples. Right. So today we have this very unique opportunity for Nina to go through much more in detail around 361 and its business vision and its business strategies to further capture market shares in the Chinese market, to grow its business both through offline, online, and through its technology and brand upgrade, and to also answer some of your questions around the company. So moving ahead, I will leave the floor for Nina, and Nina, you are happy to present a little bit about 361.
Okay, thank you, Yining. I always learn a lot from your conversation that you have with us, and thanks for the intro. I think you are pretty right. Our investment highlights stays in 2 or 3 factors. So first, we're a high growth company compared to our peers or the industry average. We definitely outperform, and I will share the key reasons later. And also, we are deeply undervalued. So given the stimulus package, and I think the confidence in consumption trend in China is kind of like gradually coming back. We do think we have a special position to attract investors to look at us. And also our payout ratio is also very attractive. So our promise is to pay no less than 40% of our net income, net profit, to reward our shareholders. But that's just like the bottom line. And we do have plans to gradually increase our payout ratio, given the very strong, cash position we have at the current stage. So can we go to the next page, please?
Yes.
By the way, I've been with the company for almost 10 years, so I've seen ups and downs of the industry, and I hope I have some insights to share with the investors today. So the long-term version of us is still become a very reputable brand, not only in China, but also globally. That's why we dedicated a lot of resources to sponsor international large-scale sports events. And also having a lot of NBA endorsements to do the showcase of our products in international markets. So we want to be positioned as not a fashion brand, but also but a very dedicated professional brand, and we want to be a youthful and internationalized brand too. So that's our brand positioning. That's why we did a lot of like IPs or key cool products to tap into younger generations. And in terms of internationalization, we did a lot of like international sponsorships. So I think some of you already know that the competition in China is getting fierce. So every industry is doing is basically over competing, not only in price but also in quality. So basically, everyone is trying to offer premium quality in terms of the products, but also in terms of the ASP, the selling price. Everyone is trying to, control the cost to offer more attractive, low price products to the consumers. So basically, it's so. I would say RAS rate, something like that. So over competing. I think our specialty comes out. So we did a great job to combine those two things. So we keep innovative technology. We keep investing in R&D. This is roughly 3 or 4% of our total revenue to offer upgraded product with the perfect functionality. For example, our carbon plated running shoes, Flying Flame. Number 3 is one of the best seller in 2024, and we upgraded to Flying Flame 4th generation, so 4.0. The detailed is getting more fierce. The shoe is getting lighter. Basically, you can run faster with this very cool shoe. But the average tag price, the retail price is reduced for 100 RMB. So you can imagine how fierce the competition is getting in China right now. But we did it. The 361 did it. We can both offer good products, better premium products, but at the same time, as Yining showed in the PPT, our tag price is 25 to 30% cheaper compared to other domestic brands, not alone international brands. International brands, our price, if you compare similar functionality products, is roughly 1/3 of them. So it's very, very competitive in China's market right now. So in terms of the strategy, the number 1 is very important, because going forward, the competitive advantage comes from the core products. So how can you offer better products? You still need to invest in R&D so you can have this resilient growth. So we did a lot of great work in this area. And in terms of the products category, running, basketball are the biggest categories we have. So roughly running takes about 50% of our revenue. So this is the most important product line for us. And we can meet all runners requirements, no matter you are beginners or elite runners, marathon runners, triathlon runners. We can offer all kinds of products with a very competitive price attractiveness. And basketball, as we just mentioned, we have 4 NBA basketball stars right now. So Nikola Jokic, of course, he's very famous, 3 times MVP. He and Eric Gordon are from the Dallas Nugget team. And we also have Spencer Dinwiddie from Dallas Mavericks team, and then have Pope. He's from Orlando Magic team. So both, all of them are very rising. We can say rising stars, are very competitive, and also has a lot of fans. And also those 3 teams are also very strong teams who can get a champion, who has higher chance to get a champion this year. So we really hope the basketball NBA stars can help us to fuel our sales going forward. And then the rest, so basketball takes about 10%. So now those 2 categories takes about 60%. And then the rest of 40% are training and a lifestyle. But we did do a lot of, specialized areas like outdoor, like sun block, jackets, like windbreakers, like women's fitness in yoga or skateboarding. And it's very exciting that this year, 2025 Q2, so starting from April, we're going to launch our own designed tennis product to the market. It's very cool functional products, but the price for each tennis skirt or the whole skirt is only roughly 200 something RMB. So very competitive if you compare our products with other international brands. And the second strategy is we're gonna try our best to attract consumers' mindset, because their preferences are changing, are evolving on a daily basis. So now they don't want a standalone store anymore. They think that's very small, very boring. They're looking at very big, like 1,000 square meters superstores, and we did that last year and also in the beginning of this year. So now we have 5 very big one-stop shop superstores for our consumers, and they really love this because those big stores offers them better experiences, covers all kinds of product, covers age from kids from 3 years old to all the way to adults. So it's very promising retail creativity that we've been trying we've been trying to tap into the consumers' new mindset. And the third one is to cost control. So basically, you still need to do your homework to increase the quality, enhance the quality, but also do a great job in cost control. So make sure your tag price is not increasing a lot. And if you look at our 2025 trade fair orders, because we still host the 4 trade fairs every year to secure the orders in advance. So Q1, Q2, Q3, the trade fair orders are already secured. But the main growth is coming from a volume, not tag price, not ASP. So that also is a very strong signal that saying that we did a great job in terms of cost control by upgrading products, but we can still offer very relatively stable, tag price to our consumers. So that's something really amazing to make us enjoy this resilient growth for 2024, but also for 2025. So that's going to trend. That's going to be the trend for this year too. Next page. Brand building. Yeah, next page. So usually we spend, by the way, if you are familiar with the NBA players, those are the 4 NBA endorsements we signed. Nikola Jokic, of course, is the most famous one among those 4. So next page, please. Basically, we invest roughly 10 to 13% of our total revenue in A&P, so advertisement and promotion. And the biggest chunk, of course, goes to international sports events, because we think this is very important to expose our brand globally. And also, as you can see, we are the official partners or sponsors for Asian Games for 5 consecutive times already, starting from 2010 Guangzhou, and then we sponsor Incheon in Korea in 2014, and the 2018 Jakarta in Indonesia. And the 2023 in Hangzhou, it was delayed because of COVID. It was supposed to be 2022. And then we also got the sponsorship for Aichi Nagoya in Japan for the Asian Games for 2026. So that's also very exciting news, because that means the organizing committee trusts our support, and then is also very satisfied with our track record in terms of the sponsorships, and also the gears equipment that we sponsored for the whole Asian Games, like the volunteers or the judges, referees, everyone is wearing the products that are produced and produced by us, designed and also, of course, produced by us. So that's something very interesting. And actually in 2025, just in February, this month, we sponsored Harbin 2025 Asian Winter Games. This is the first time we sponsored like a winter-related Olympic Games or Asian Games. So it was very exciting, as Yini mentioned. The ski, the sport is getting more popularity here in China, especially for the younger generations. And whenever there's a holiday, they're talking about go to ski with their families in China, northern part of China, or in Japan or Korea. So the demand is gradually releasing right now. Of course, we do see Chinese people are having the mentality of buying, ski-related gears. So this is really a very fast growing market, and definitely we want to tap into this market going forward. Yeah, next page, please. We'll talk about this in the time because quite conscious of time management. So running definitely is the most important category, and going forward, it will also be the biggest category or revenue contributor for us. So we selectively sponsor some famous marathons in China. In China, the marathon culture is so popular. And every weekend, despite the summer seasons, because of the weather is not suitable for running, but on average, every weekend you can see 20 maybe marathons nationwide. And the local government definitely wants to use this window to attract more tourists coming to their city to spend. Everything is about spending. So in hotels, in restaurants, in culture, tourism. So this is going to be the trend going forward. And we do see elite runners are still fond of the carbon-plated running shoes. And the replacement rate is actually still quite high for them. And our carbon-plated running shoes on average is like 600 to 800 RMB per pair, compared to international brands, which is like roughly 2,000 per pair. Our product is very value for money. So definitely meets the demands of the elite runners. So this is something we're also very proud. We're gonna, increase the, high-end carbon-plated running shoes, but also our price range roughly sits in 300 to 400, the majority of our footwear. So not only elite runners, but the beginners or the regular runners can also find value for money products from our, product matrix. Okay, next page, please. Basketball, yes. So, we offered a lot of blockbusters, like a Big 3 series, and now it's already Big 3 5.0, not only 4.0. So we constantly upgraded those, bestseller series to attract more consumers, be a loyal fans of our product line. So definitely we're gonna leverage the NBA basketball players, China tour every year. In the second half, they will come to China and visit some key cities of our business, and also have a lot of events with their fans. So those will also greatly help to boost the revenues or the sales, the retail sales at those places they go to. So this year, we are very looking forward. Yorkeg can make his time, come to China, because his series Joker 1 was just launched by the end of last year, and even it's only 2 months, the sales was actually quite good, definitely meet our expectations. So we hope his China tour will also give a boost to the retail sales of those stores he's been to. Okay, next page, please. Training and the lifestyle. So as we mentioned, the yoga series is still very popular in China. And one thing to mention is our majority of our stores are based in tier 3 and below cities in China. So roughly 70 to 80% of the stores. So that's something quite amazing, because in terms of the sports or the exercise penetration rate, lower tier cities is definitely very high compared to tier 1 and tier 2 cities. So a lot of people from lower tier cities in China are just getting the idea of going to gym, or getting a membership card, or get running, or get to diversify their sports on daily basis. So they definitely need a value for money gear for running, for badminton, for a lot of those kind of sports. That's why our products perfectly match their demand, especially for lower tier cities. And in terms of the demand from lower tier cities, it's actually even more real compared to tier 1 and tier 2. Consumers from tier 1 and tier 2 cities are actually focusing more on niche sports like, tennis. Yoga is already common, sports for tier 1 and tier 2 cities. Like tennis, ski, those kind of more high-end, more niche market. So our products definitely meet more brands coming from the actual real demands coming from the lower tier cities in China. So going forward, we're going to keep, launching better and the price attractive products in outdoor, in yoga series, and the skateboarding. Skateboarding is getting more and more popular among younger generations. So now it roughly contributes roughly 5% of the total revenue. So it's actually growing very fast. And we do have a lot of cool products like the shoes, the outfit in skateboarding line. Okay, next page, please. This is our sales overview. This is for first half of 2024. We're in our blackout period, so cannot talk too much about numbers, but I think one trend I can share is in terms of the penetration rate, we're doing a great job. So 5,740 for adults stores actually is a good number. Going forward, you won't see a big jump or increase in terms of the store number. But what we can do is to keep, opening, having our distributors opening larger stores going forward. So as you can see, 143 square meters is an average store size. But if I remember correctly, going forward, this number will be 150 or gradually increase. So larger stores means higher store efficiency, more foot traffic. So in terms of the purchasing units per customer, it will also be increased. So that's the actual good retail sales indicator of each store. So don't just look at the absolute numbers of the stores, because that's how you link the growth, right? But only with the store number, that's not giving you the full picture. So do think about the store size, the store efficiency, and all the sales through rate, the stock, the inventory level. All those indicators at the store level are very healthy from our perspective. So we're going to keep increasing the store efficiency, like rolling more generations, the store generations to the latest generation. And also, as I mentioned, we have more super stores. Those stores are the daily average retail sales could be easily 300K, 250K RMB. So that's also very, very robust retail sales number. And each month we disclose our retail sales growth. As you can see, 2024 still teens, right? Low teens, high teens growth. This definitely is much better compared to our peers. Some of them, in terms of the retail stores, the retail sales growth is flat, low single digits, or negative. So definitely that number, the retail sales growth number, explains why why our market share actually is keep increasing. We're keep regaining market share compared to our peers. Okay, next page, please. E-commerce. This is something also very unique about us. Not unlike our peers, most of them, they will just launch the same products from offline to online. It's easy, right? But when we first started our e-commerce platform, we targeted to offer web exclusive products. So we want to make a product differentiation. So the two platforms are not competing consumers against each other. So now the online exclusive products, it takes about roughly 90% of the e-commerce revenue, and then the rest of 10% is to help the offline stores to clean some old inventories or obsolete, sizes products. So that's a very healthy, balance already. And if you have a higher percentage of the web exclusive products, that actually gives you the reason why our e-commerce is growing faster than our peers. And then now it takes about 25% of our group revenue. And especially after COVID pandemic, you do see the preferences of consumers migrating from offline to online. It's much easier, faster, and if they know their size, they definitely prefer online channels. And also, in China, e-commerce always have a lot of promotions. So basically, you have the discount or coupon throughout the year. So that's very also attractive to push your button on your mobile phone or on your computer to do the online sales, to do online orders. So this is something going to be still a very good revenue generator for us. And we launched a lot of like web exclusive products to test the water. So after the first, maybe the volume, you don't have to be very big, but if it's sold out right away, or if it has a good feedback, our in-house factory can quickly make the orders to meet the demands from online platforms. So this is something very unique about us. And we do think online growth will be resilient, will enjoy the current trend going forward. Next page, please. Kids, this is something also we're very proud of. Our brand was only 20 years, right? So founded in 2003. Still the youngest brand among our peers. But the Kids was founded in 2009. So we launched the products in 2010. It's like we definitely enjoy the first mover advantage, the same as Anta, the biggest player right now. And it's very interesting because Kids has a natural good impression about the numeric numbers, right? 361, it's like a numeric number. So it's easy for them to remember and to be curious about it and fall in love with it. So we offer a lot of like cool products along Kids business, like, rope skipping shoes. That's something really interesting because a lot of kids, they need to test the rope skipping as like a PE test in primary schools. So this is one of our best sellers. Those shoes can help them to have a better score in rope skipping. And also we launched a lot of like a GPS, tracker, the smart shoes. So parents can, monitor the kids' movement on the app on their mobile phones to increase the safety. If then anything goes wrong, if they're out of the area, you can set, there will be like a flag or alert on your phone. So all those kind of like cool products were launched by us. We're the industry pioneers who are the first one to design and even produce those kind of products. So Kids definitely gonna still use a lot of like a technology we have for adults, right? But those patents or technology can be easily applied to kids, like a dry feet, the carbon plated shoes, running, basketball, football, and also yoga series. Also we apply that into kids products right now. Next page, please. So Kids sales 2,000 roughly, 550 points of sale. It's really a good number. And if you compare to our peers, some of them only have 800, 1,000. So this means high penetration in China. And in terms of the retail sales, it's a little bit faster than our adults, than our core business. So going forward, this is also a very revenue generator for us. And for kids, you can see the mall and the department stores percentage is much higher compared to adults because a lot of families, they prefer going to shopping malls in China on the weekends. It's like a one-stop for all shopping experiences. So going forward, also we want to tap into more, new malls and department stores in China, especially lower tier cities. They open a lot of new malls. So this is going to be very exciting, retail expansions for us. Next page, please. Oh, this is the first half 2014, key data. So revenue, as you can see, 5.1 billion. And our target for 2024 is above 100 billion. So you can calculate from historical data. Our growth rate is definitely very competitive compared to our peers. And the revenue breakdown, as you can see, the majority of our products are coming from footwear, apparel, roughly 32%. And in terms of apparel competition, it's more fierce. because the entry barrier is lower. So you can see a lot of like small brands, they just launch their own brands. And maybe they will be very attractive to consumers because their price is even lower. But we are confident that because our key business revenue is coming from footwear, and we have a lot of good technology associated with footwear, it cannot be easily copy and paste. So going forward, we are still confident that our growth will be sustainable. So like high teens at least for 2025. That's the trade fair orders we secured as of now. But we will share a more concrete guidance for the whole year in our annual results announcement day, which is March 12th. This is gross profit. Gross profit margin is always quite stable, so between 40 to 42%. Again, we have in-house production, roughly 30%, and we outsource to OEM, roughly 70%. So we did a great balance to maintain a stable GP margin, so still around 41 to 42%. Okay, and the GP margin of footwear, apparel, and kids fluctuates sometimes, depending on the product mix. But it's still overall very stable if you look at the historical data. Next page, please. OP margin roughly 20%, income tax roughly 21, 22%, so quite stable. And profit, net profit roughly our guidance for 2024 is 10 to 12%. So we will announce the results very soon. So hopefully you can still follow our margin, all those detailed financial data on our announcement day. Next page.
All right, I think that was actually most of it, and then the other ones is actually the Q&A session. So I think we did a good job to keep the presentation quite intact, and I hope all the participants were able to get a good overview of 361, which definitely is a challenger in the market to take a further market share from the established players such as Li-Ning and Anta, and doing it so by continuously upgrading its product to improve their competitiveness, not only on the brand and technology, but also on price, right? So as we talked about before, right now in the Chinese market, there are different trends. One is, of course, consumer upgrade, but one is definitely that people, certainly consumers, are still very cost conscious. So thereby having their products at the same performance level as many of these peers, but have a discount relative to the other major players around 20-25% makes 361 very competitive in the market, especially addressing the tier 3 cities and below. And the competitiveness is now showing into the online platform, into its 361 kits, and as the products also increases towards a more high-end user base with marathon runners, etc., the competitiveness for 361's products is showing off, and we can see that in the results as well. That has demonstrated a very solid and resilient growth over these years. And we've talked about weaker nominal GDP growth, but there are a lot of companies, and especially here at 361, that has been growing at high teens, double-digit growth per year. So we think that is actually quite impressive given the very fierce competition and also the relative a little bit more cautious consumer sentiment that has been last year. All right, so I think that was most of the core presentation. Now we'll go into the Q&A session. And for the Q&A session, you can both use the chat, or if you want, you can also open up your video and the microphone and ask your question directly towards Nina. So let's see if we can open up the floor for participants for some Q&As here. All right. Let's see.
Oh.
Okay. All right. We have a question coming in here. All right. So the question is, could you elaborate a little bit more about 361's dynamics with the distributors, and what is the mix between direct retail and wholesales? So.
Okay. That's a good question. So online platform is run by us. So this is directly DTC kind of model. But for all the offline stores, adults, kids, all those stores are not run by us. We don't have DTC. We only rely on our distributors, which is 31. So basically each big province in China, autonomous regions and a province has one, geographically speaking, exclusive distributor. Those distributors were with us since 2008, 2009, before we got listed. So very stable and win-win business model with us. They never leave us. We never change them. Every year we have to renew the contract with them, and basically their KPIs targets are met. So we want to renew the contract with them. So they are very stable. And then the sub level we call authorized retailers. Roughly right now is like 1,300, something like that. So half of our stores are operated and run by first tier distributors, 31 guys. And then the rest, half, 50% roughly, is run by the authorized retailers. We give two incentives, good incentives to our first tier distributors to encourage them open more stores for us and expand our network, because we are the latecomer, right? The youngest brand on the street. So the first thing is the industry lowest wholesale price. So if you look at Anta Li-Ning, the wholesale price is roughly 42, 46 out of 100. So if the product is 100, those two brands sell 42 to 40 or 46 to distributors. But we sell right now to 38. But at the very beginning, it's roughly 34, 35. So that basically means they can make more money if they are distributing 361 degrees products. And the second incentive is that's the most asked questions, the industry longest AR days. So a lot of distributors enjoy 180 days in terms of the AR, accounts receivable, the credit terms. This is the longest because still we want to incentivize, encourage them to be more aggressively tap into the markets and open our stores. And those two combined together, lowest wholesale price, longest AR days, actually work perfect well. So that's why we're like a black horse in the industry to become number 4 very quickly. Our network, our whole revenue becomes number 4 in China. And the positioning was quite stable, and we are also closing the gap between us and number 3 in terms of market share. But we never have 1 cent of bad debt, even though we have the longest AR days. So right now, we still support our distributors because sometimes they feel like, the market is like this. They definitely want the money to sit in their pocket for a little bit longer of time. So this has been the model for a long time, and we don't want to cut it from 180 days to 30 days right away, like a deep dive like that. So we're going to gradually decrease the AR days and increase the quality of the aging analysis, that's for sure, of our target. Yeah.
Okay, very good. Thank you very much, Nina. And as you know, Nina is very experienced, meets a lot of investors. So most of the questions, I think she has a very baggage. She's very knowledgeable about what the company has been with the company for over 10 years. So it's a great opportunity to consult and ask her a wide range of different inquiries. Should we continue on with the next question and see if we have any other questions around here? Yeah, curious about the business model, financial details, etc. Yeah, let's see. Could you share a little bit more about long-term and short-term goals and challenges? And what's your view on the low-tier competition from other brands? What is the landscape when it comes to competition in the lower tiers markets? For example, domestic brands and international brands in the low tier market, and do you see any competition pressure coming from Anta and their new series called Super Anta recently? Yeah, so
that's a great question. That's a great question. As I mentioned, our stores, 80% roughly are located in lower tier cities. So that's our big base and we're very confident our advantage gonna be sustained in lower tier cities because cost down trading is still what the consumers are looking for in lower tier cities. And we're not only good in price, but also premium quality. So that's perfectly combined. The nature put us in the top priority when customers want to, purchase their first sneaker for running, for badminton, or for other sports. Competitions, of course, is getting fierce, but when you look at the market share for last year, it's quite interesting. Nike and Adidas keep losing market share, also Li-Ning. Anta and us are also gradually, stably gaining our market share. So I think that's a very good signal. So it means our products are well endorsed by our consumers, especially in lower tier cities. And even though Anta launched a lot of like super Anta stores, so a lot of investors ask me, is that the direct competition against you? And how do you feel the pressures? Did you lose market share in lower tier cities? First of all, we think it's still a short period of time. They just launched a couple of months, and in terms of the stores, it's only dozens, right? Not that many. And when we look at our monthly retail data, retail sales, it's still on the right track. So we don't see it's like our monthly retail sales are having a big retreat or decrease. So that means, of course, there will be some impact, but the impact isn't huge as for 2024. And going forward, will the impact be enlarged? We'll wait and see, and we'll closely monitor their maneuvers, their moves. And we also launched our superstores. It's a very similar type of Anta. I think this requires high execution capability and also good R&D capability and production capability. And right now on the street, only Anta and us have those kind of like a gigantic superstores. So we are confident that we won't have a big decrease in terms of market share in lower tier cities, because we are very focused on footwear. That's already the consumer's mindset has been tapped into. They know 361's best sellers are Big Three, are Flying Flame, are this and that. They know. So whenever there is an upgraded product, we can still retain the consumers because of the loyalty. So of course the lower tier competition will be fierce, but we're gonna keep our heads down, keep producing better products with attractive price. So I think if we did the two things, if we're not making any mistakes, our market share will be still be gradually increased, at least for 2025 or in the near future. But no one has a crystal, ball, right, on their hand, and I cannot promise what's going to happen after 3 years or 5 years. But as for the near term, we're still confident that we're going to stand out in the fierce competitions, especially in lower tier cities in China.
Very good. I have a question that I would just want to, flick in here, and then what about 361's international expansion and possibilities, opportunities ahead? Because we definitely know that, a lot of the Chinese sportswear products, the products that you produce in terms of quality, performance, branding, it is actually very competitive, not only just in China, but also overseas. So what about some opportunities for 361 to look at, making growing your sales network and growing your sales exposure towards the overseas market? What are some thoughts and possible strategies that you are looking into to actually take your products not only in the very competitive market in China, but also may expand your market presence outside of China? So if you could share a little bit around your overseas potentials.
Yeah, that's a very good question. A lot of China consumers brands like a Pop Mart, like a Miniso, their overseas expansions and strategy actually work quite well. So of course, this is something we always very interested in, and we tapped into international market a long time ago, like 10 years ago almost. So even though the revenue contribution is still less than 2%, but we have roughly 1,300 points of sale globally right now. And I just checked, we do have some points of sale in Sweden. I'm going to find the details, and
All
maybe
right.
investors from the other side can take a look. In terms of the quality, the technology, the functionality, I think our products are quite competitive. It's still value for money if you compare us with other international brands. But in terms of the tag price, we are still $30, $50 cheaper. So I think for very rational, mature consumers who only look for brand quality, not only for branding, which most of the premium wear goes to, they give us a chance to try our products. So that's why we still our products are sold still very well in some of the places like Italy, Spain, Germany. We have more than 200 points of sales there. So hopefully the revenue contribution will be gradually increased. But it's a tough market, to be honest. You see, if Nike is destocking, offering sharp discount on their Air Jordan, on their best sellers series, of course you have the pressures to mark down too. But again, as long as we can still offer good quality product with a relatively still attractive or cheaper price range, we think we can still get a chance to stand out, to gain more consumers' trust in overseas market. Yeah, and we just recently opened our first DTC store in Malaysia, KL. So that's something very exciting. We're gonna try those new stores in overseas market and see how it goes. If it's going very well, we're probably gonna open more DTC stores in overseas markets, and then that will actually generate more profit for us, right? Because you don't have wholesale anymore. You can just run the stores on your own. But of course, there is also a challenge there in terms of management capability to really get the stores on work. But we're not afraid of challenges. Of course, challenges is everywhere, anytime. But I think that right now is a really good moment for us because of the exposures in international sports events sponsorship we've been doing for the global market. I think our brand is not new compared a lot of other domestic brands to international consumers. So especially our NBA players are wearing our products on every match. That actually is a good showcase of our products, because they don't want to get hurt, right? They don't have any intention of jeopardizing their performance. But if they can trust our products, I think that's the best branding they can help us to promote in global markets. So definitely we want to leverage more on those resources we have, which some of our peers don't have. And we think that will also help us to boost the sales in overseas market too.
Very good. Yes. Do we have some other questions from the participants here?
Yes, I see 2 on the chats.
Okay. Wow. So, all right. I think, yeah, it was those. All right. Given the strong cash flow in 361, do you have any further potential M&A plans or buyback plans for increasing the shareholder return?
This is a must ask a question. I think a very good question. Yes, we have 4.5 billion net cash on hand as of interim of 2024. So definitely given our very low valuation, I think the most direct, straightforward way to do is to increase our payout ratio. So as I just mentioned, 40% is our bottom line, right? But we're gonna gradually increase this payout ratio to have a better return for our shareholders. And given the low PE valuation, our dividend yield actually is quite competitive, of the highest compared to our peers. So roughly 8 or 9%. That's very, very attractive. But if we keep, increasing the payout ratio, I think that's going to give us a very attractive position to our investors. And M&A, we've been looking at this domain for many, many years since we have a lot of cash on hand. But to be honest, not everyone is Anta. Not everyone can buy some brand and make it profitable or make it very run very well. If you look at Xtep, they spin off some of the M&A targets they acquired from listed company. It's not easy, but we are still keep looking for interesting brands. Of course, it has to be international brands, and also it has to be functionality brands. We're not going to tap into fashion, luxury, those kind of like a domain, because that's not the DNA we have right now. We definitely need functionality, either footwear or apparel, as long as it's functionality positioning. That's something we're always interested. Niche market or running market, any functionality products, we're all very open-minded to talk. Yes. So if there's any good market potential target, of course we would like to approach them or be approached and to talk about the potential cooperation. JV is the most easy one, I guess, right? So we can help the brand to be more famous and have more stores here in China, given our network, our know-how, our experiences here. So of course, that's something we're always looking into. Share buyback, to be honest, because as Yining put, our Ding family and the Wang family, the founding two families already own 65%. Our liquidity is the issue. So if we buy back more shares, actually, that won't help in terms of the liquidity. And the shares will be more concentrated by the two families. And also, it won't be a big boost to the share price, right? So we are very hesitated, to be honest, to buy back share, even though we know a lot of our peers like Anta or Yueyuan or other brands are constantly buying back the shares. For us right now, we want to increase the liquidity, the trading volume, the trading values on daily basis to attract more funds to invest in us. So right now, most of the active funds are also hedge funds, PE funds in China, because we're in the Shenzhen, Shanghai Stock Connect. A lot of big funds, insurance funds or other long-term funds, they want to buy our shares, but the technical thing is liquidity issue. So I think our target is very clear right now. Increase the valuation, increase the liquidity trading, and increase the shareholders' return for our shareholders and potential investors. Yeah, so definitely cash utilization, we're going to work on that, improve on that, and hopefully our ROE will be even better compared to last year.
All right, very good. Do we have any other questions from the participant? I know we're running over a little bit. Maybe I'll just try to have one final question, because I think we have a lot of interested investors here, and we talked a lot about online. We talked about revenue growth. We talked about shareholder return. We talked about overseas expansion. Could you just give us a little bit view around the margin outlook as well, both on the gross margin side and maybe possibly what you see could be a couple of drivers for potential EBIT margin improvements in the coming years?
Okay. So if we don't have any DTC for this year, most likely we won't, because the Chinese market is really tough right now. So we want to be cautious. We don't want to make any mistakes because we are already enjoying the resilient growth, right? So if no DTC for 2025, our GP margin will be still stabilized around 40 to 42%, and OP margin roughly around 18 to 20%. But again, this is our current understanding, and we're going to reconfirm our guidance for the whole year on March 12th. And I think Yining can share our guidance with the investors by email at that time. And OP margin, we talk about that. Net margin still, we want to maintain between 10 to 12%. That's always been our near-term goal. But of course, the higher, the better. Because our A&P expenses roughly is very stable, 10 to 30%. R&D, we're going to gradually increase, hopefully to 4% and maybe higher than 4%, because that's we talk about is the key competitiveness of your products, right? So that's going to be a little bit higher, gradually higher if possible. And the rest of the costs are very stable too. So we definitely hope our net margin growth will be in similar trend of the top line. because some companies you see their top line is growing very fast, but in terms of net margin growth, it's actually not quite satisfactory. So we're going to try our best to do the cost control and to have a better margin growth going forward.
All right, very good. Okay, I think that was most everything from our side here, and I think we've asked a lot of questions here. And I want to also be mindful of everybody's participants' time and also of Nina's time to carve out from her very busy schedule. Before we wrap up here, do we have any final question? One last question to Nina. All right. Okay, I think in that case, let's try to wrap this up a bit. So again, Nina, thank you so much for being able to take your time and to participate with us today to share more details around 361. We definitely appreciated your presentation and also the opportunity to ask some very specific questions in which we got a good overview of the company. And for all participants and investors here, we are happy to follow up on this and any more further questions when it comes to 361. As you know, they will release their results on the 12th of March. We'll definitely be able to share some updates on that. And also when it comes to our fund and what we do, we're happy to contact us and we'll share more details in the description and the presentation below. All right. Thanks everyone for participating in today's presentation. I hope you found it very valuable, insightful, and can be helpful for your allocation decision and your analysis for your portfolio composition in the year 2025 ahead. So thanks again, everyone, for participating, and great thanks again to Nina Zhang to carve out this time. And we wish you all the best, and please send our best regards to the management team of 361 as well.
Thank you, Yining. Thank you, Nordic Asia. We're happy to be here. So everyone stay healthy, to exercise more, and try our products if you have time, if you have a chance. Okay.
Yes. Thank you very much. Thank you.
Bye.
Thank you. Bye-bye. Thank you.